So, good afternoon, classmates, schoolmates. We are the Group 15 and we are here to report to you the Philippine Accounting Standard 34, the interim financial reporting. Today, we'll be your presenters. So, ipapakilala ko muna yung mga ka-groupmates ko. Next slide po, please. I am John Bernard Mejia, the leader of Group 15. With me is my assistant leader, Ms. Maria Eloisa de Guzman, as well as our members. Starting with Ms. Nelia Cadinong, Ms. Mika Antamayo, and Ms. Angela Hazel Mati. So, yun, kami po yung mag-represent sa inyo today. Next slide po. So, the objectives of PS34 is to define an interim financial report. Next is to state the scope and applicability of PAS34. Next is briefly describe the recognition and measurement applied in interim financial reporting. And lastly, compute for income tax expense in the interim financial statements. So ang introduction po ng PS34 is to be reported by Ms. Angela Hazel Mati. So,
thank you, Mr. Mejia. So what is interim financial reporting? Interim financial reporting means the preparation and presentation of financial information for a period of less than 1 year, and a financial report prepared for an interim period. So meron sa isang business, ang isang business ay nagre-record ng mga transactions or mga events on a specific period of times. Meron tayong calendar year, fiscal year, at interim period. Interim period, which is ito yung ginagamit sa pag-prepare ng interim financial report. Unahin muna natin yung calendar year. Pag sinabi natin na calendar year, nag-uumpisa ito sa mismong period na yon, simula January 1 to December 31. Pag sinabi naman natin fiscal year, nag-uumpisa siya on any month, basta first day except January. Pwede February 1, March 1, April 1, and etc. Pag sinabi naman natin interim period, pwede siyang semi-annual, quarterly, at monthly period. Next slide, please. So proceed na tayo sa PAS 34. Pag gagawa tayo ng interim financial report, piniprescribe tayo na minimum content lang yung gawin natin sa mismong interim financial report para maiwasan yung mga complications, mga ganun. Next slide, please. So is it required to prepare interim financial statements? PAS 34, however, in-encourage din tayo na gumawa tayo ng interim financial report, at least semi-annual financial, para sa mismong first half of the year. Hindi naman siya mandated na gawin ito, pero na-encourage lang tayo. So in the Philippines, under the reportorial requirements of the Revised Securities Act, the Securities Exchange Commission and the Philippine Stock Exchange, however, this is a separate organization. So they require entities covered by the reportorial requirements of Revised Securities Act to file quarterly interim financial reports within 45 days after the end of each of the first 3 quarters. So again, PAS 34, it does not mandate na gawin ito, but it depends on the government agency or mga independent agencies kung saan belong ang companies o kung saan man siya na-classify. Kaya depende ito kung mayroon silang requirements for filing an interim financial report for specific period. Then the company should follow in the case of SEC and PSE. So dapat makafile sa interim financial report on a quarterly basis within 45 days after the end of each of the first 3 quarters. So for the next presenter, to explain the difference of PAS 1 and PAS 34, Ms. Nelia Cadinong.
Thank you, Ms. Mati. So, since Ms. Mati already introduced the PAS 34, so I'll begin by explaining the differences between PAS 1 and PAS 34 and, of course, its contents. So, an interim financial report is a financial report prepared for an interim period. An interim financial report means a financial report containing either a complete set of financial statements as described in PAS 1. Second, a set of condensed financial statements as described in PAS 34. Next slide po. So an entity presenting an interim financial report has the option of applying either PAS 1 or PAS 34. So gaya nga ng sabi ko kanina, interim financial report may be present in a complete set or a set of condensed financial statements. So for an entity, it is going to be an option if PAS 1 or PAS 34 yung i-represent nila. Next slide po. So as you can see here in the slide, these are the contents of an interim financial report. So here in PAS 1, first is financial statement of financial position, which is also known as the balance sheet, reflecting the financial standing as per the date of the financial statement. Second, statement of profit or loss and other comprehensive income, describing the formation of an operating result. Third, statement of changes in equity. Fourth, statement of cash flows. Fifth, notes. And lastly, additional statement of financial position required only when certain instances occur. So, however, here in PAS 34, these are the minimum contents. First, condensed statement of financial position. Second, condensed statement of profit or loss and other comprehensive income. Third, condensed statement of changes in equity. Fourth, condensed statement of cash flows. And lastly, selected explanatory notes. Next slide po. So kung makikita nyo, ito yung mga actual examples ng complete set at saka ng condensed financial statements. So yung unang example is yung statement of financial position ng San Miguel Corporation. So kung mapapansin nyo, every line item is classified presentation, which shows the distinction between current asset, non-current asset, current liability, and non-current liability, as well as with the totals. So dito din sa next slide, ito naman yung condensed version ng statement of financial position. Kung mapapansin nyo din, naka-classified din siya, pero yung totals niya is nakalagay lang is total asset lang. Tapos kung mapapansin nyo din, mas nauna yung non-current asset kaysa sa current asset. Di ba kung mapapansin nyo dun sa complete set, mas nauna yung current asset kaysa sa non-current asset. Next slide po. So here in the statement of income, primarily focuses with the company's revenues and expenses in a particular period, and it indicates how revenue are transformed into a net income or net profit. Next slide po. So dito naman sa condensed version, nagfo-focus sila sa income statement detail lang to just a few. Typically, this means that all revenue line items are aggregated into one line item. Next slide po. Tapos dito naman sa changes in equity, it is a financial statement showing the company's equity for a given period of time, and it also shows the company's share capital or value of share it has issued to its shareholders. Next slide po. However, dito naman sa condensed version, changes in equity cumulatively for the current financial year to date with a comparative statement for the comparable year to date period of the immediately preceding year. So next slide po. Dito naman sa complete set ng cash flows, as you can see here, every line item is hindi lang pala sa cash flow, halos lahat naman ng ng FS sa complete set is maraming notes na naka-indicate. Pero dito sa next slide, which is condensed version, uunti lang kasi nga 'di ba, since it is a condensed version, very minimal lang yung detail, tapos selected lang yung notes na binigay. Next slide po. So these are the things or notes to remember in presenting the interim financial report. So first, an entity is not prohibited or discouraged from preparing a complete set of financial statements in accordance with PAS 1 for its interim financial report. Second, in view of timeliness and cost considerations, to avoid repetition of information previously reported, an entity may be required to provide less information at interim dates compared to its annual financial statements. In such case, the entity applies PAS 34 to provide a set of condensed financial statements. And lastly, at minimum, condensed financial statements include each the headings and subtotals that were included in the entity's most recent annual financial statements and the selected explanatory notes required by PAS 34. So for the next presenter of significant events and transactions will discussed by Ms. Nika Antamayo.
Good afternoon. I am Nika Antamayo and I am reporting about significant events and transactions. Interim reports are intended to provide an update on the latest complete set of annual financial statements. Hence, they focus on providing information on significant events and transactions rather than duplicating previously reported information. Users of interim financial report are assumed to also have access to the entity's latest annual financial report. So, sa significant events and transactions, yung interim reports na ini-issue siya tuwing isang taon. So, yung ini-issue na interim report is yung pinaka-latest at hindi na dapat isama yung mga past years doon kasi ang gusto lang nilang makita doon ay yung mga significant lang mga transactions o mga nangyari sa loob ng isang taon. At ina-assume na yung mga users ng entity ay meron din silang access doon sa financial report na ginagawa every year. Next slide, please. So, examples of events and transactions for which disclosures would be required if they are significant. So, ito yung mga significant events or transactions na ini-include dun sa interim report. So, ito yung examples niya. Una is yung write-down of inventories and reversal thereof, impairment losses and reversal thereof, reversal of provision for restructuring costs, acquisitions and disposals of PPE, including purchase commitments, litigation settlements, corrections of prior period errors, business or economic circumstances affecting their fair value of financial assets and liabilities, unremediated loan default or breach of loan agreement, related party transactions, transfers between levels of fair value hierarchy used in measuring the fair value of financial instruments, changes in classification of assets, and changes in contingent liabilities or contingent assets. So yung mga examples na to, kapag nangyari siya, kailangan natin siyang i-include dun sa pinaka-latest natin na interim report. So next slide, please. Other disclosures. In addition to significant events and transactions, the following are also disclosed in the interim financial report. So, yung mga examples kanina, yun lang yung mga events and transactions. So, ito, additional siya ng mga disclosures na kailangan din i-add doon sa interim financial report. So, ang examples nito is a statement that the same accounting policies were used in the interim financial statements as those in the latest annual financial statements. If there have been changes, those changes are disclosed. So, kapag mayroon na tayong nailagay doon sa ating interim reports at mayroong biglang nabago doon sa pinaka-latest, babaguhin mo, yung binago mo, ilalagay mo ulit siya doon para maging pinaka-latest pa rin na mga events and transactions yung makita natin doon. So, explanation of seasonality or cyclicality of interim operation. Unusual items affecting the financial statement element. So, yung mga unusual items na nakaka-apekto din sa financial statement din is kailangan din siyang i-disclose sa interim financial report. Changes in accounting estimates, issuances and settlements of debt and equity securities, dividends paid, segment information, if the entity is covered by PFRS 8. Events after the reporting period, so kailangan din natin ilagay after yung reporting period, ilalagay din natin siya yung sa interim report, yung mga events na nangyari kapag katapos ng reporting period. So next is changes in the composition of entity. Examples of this is business combinations, obtaining or losing control of subsidiaries, restructurings, and discontinued operations. Disclosures on the fair value of financial instruments, disclosures required by PFRS 12 when the entity becomes or ceases to be an investment entity. And last is disaggregation of revenue from contracts with customers as required by PFRS 15. So next slide, please. So periods for which interim financial statements are reported. So merong mga periods na ginagawa na sinusunod tuwing gagawa ng or mag-i-issue ng interim report. So una is yung semi-annual interim financial reporting, where an entity uses the calendar year as its accounting period of the interim financial statements will appear in its semi-annual interim financial report on June 30, 2021. So itong nakikita niyo sa screen ngayon, yan yung mga examples ng mga financial statements at kung kailan siya ilalabas. Kunwari pag sa current, tsaka sa comparative. Pag current, June 30, 20x1. Tapos sa comparative naman, December 20x0. So, yan yung examples ng mga dates kung kailan ilalabas yung mga interim financial report. So, next slide. Next naman is yung quarterly interim financial reporting. For an entity that uses the calendar year, the following statements will appear in its third quarter interim financial report on September 30, 20x1. So meron pa rin current siya comparative para sa mga iba't ibang financial statements. Meron ding mga dates na kailangan kung kailan siya maglalabas ng interim reports. So ito yung para sa quarterly interim financial reporting. So next slide, please. So notes natin, the comparative statement of financial position is the most recent annual financial statement. So yun yung lagi kong binabanggit na kailangan pinaka-recent doon sa isang taon. Yung kailangan na nandun sa interim report. Then, so second is for the other financial statements, the comparatives are presented on a comparable year-to-date period. The interim financial statements are presented on a cumulative basis. However, an additional statement of profit or loss and other comprehensive income is presented that covers the current quarter only. So PAS 34 encourages disclosure of financial information for the latest 12 months and comparative information for the prior 12-month period in addition to the interim period financial statements above. So next slide, please. So, materiality. Materiality judgments on recognition, classification, and disclosure of items in the interim financial report are assessed in relation to the interim period financial data and not forecasted annual data. PAS 34 recognizes that interim measurements may rely on estimates to a greater extent than measurements of annual financial data. So, kung mag-classify tayo dun sa materiality ng measurements, ginagawa dito is kailangan in relation pa rin siya doon sa financial data natin sa interim period at hindi para mag-forecast ng annual data. So, lagi siyang connected doon. Hindi yung i-forecast natin kung ano yung nandoon sa interim report. So, yun lang. Thank you. Next reporter.
So thank you, Ms. Tamayo. So good afternoon, everyone. Now I will be discussing the recognition and measurement in FAST 34. So ang sabi dito, the same accounting policies used in interim report as those used in the annual reports, except for the changes in accounting policies made after the date of the most recent annual financial statements that are need to be reflected in the next annual financial statements. So, dito sa interim financial reporting, most common din dito is yung quarterly reports. Although yung mga public traded entities are encouraged to provide interim financial reports semi-annually, and such reports are to be made available not later than 60 days after the end of the interim period. So, kung mapapansin nyo kanina, yung pinakita ni Ms. Nelia na example ng financial statements ng San Miguel Corporation ay semi-annual siya kasi isa siyang public traded entities. So, next slide po. So, 2 views on interim reporting. So, actually, wala naman talagang mention yung FAST 34 about sa integral view and discrete or independent view. So, ito na lang yung mga interpretations ng mga nasa practice. Kumbaga yung mga practitioners kung paano ba nila i-prepare yung interim report, ganun. But essentially, the standard adopts a mix of integral view and discrete view. So, merong 2 views ang interim reporting. So, first is the integral view and second is the discrete view. Or sa iba naman, tawag nila independent view or standalone view. So, dito muna tayo sa integral view. Next slide, please. So, ang sabi dito, under the integral view, annual operating expenses are estimated and then allocated to the interim periods based on the forecasted revenue or sales volume. So, ganito kasi, yung annual operating expenses, which is yung mga selling and administrative expenses, ay in-estimate. So, in-estimate siya and then, kasi di ba, nagpa-budget ka ng mga expenses mo bago magsimula yung panibagong accounting period or yung operations ng businesses. Nagpa-budget ka na or di kaya naman nire-require ng company na mag-budget. So, part of budgeting is the annual budgeting for operating expenses, which is yung selling and administrative expenses na. And then, ang ginagawa na lang nila dito ay in-allocate nila ito on an interim period. So, halimbawa quarterly, i-allocate nila ito for this quarter, next quarter, and then sa susunod na quarter based on the forecasted revenue or sales volume. Ganito kasi yung mga expenses naman, particularly yung selling expenses, ay directly na naka-attribute siya sa revenue or sa forecasted revenue. And again, yung mga company, since nagbabudget na yan sila from revenue or sales down to their expenses, ina-allocate na lang nila. Ganun, kumbaga, minamatch na lang nila alin ba dito yung mga mag-fit. Ganun. So, proponents of the integral view argue that the estimation and allocation are necessary to avoid creating misleading fluctuations in interim period income. Using integral view would result to interim income, which would be more indicative of the annual income and thus useful in predicting future operations and making informed decisions. So next slide po. Ngayon dito naman tayo sa discrete view or independent view. So ang sabi dito, under the independent view, each interim period is considered a discrete or separate accounting period with status equal to a fiscal year. Thus, no estimations or allocations are made for interim purposes unless such estimations or allocations are allowed for annual reporting. So, dito balik-baliktaran lang naman siya nung sa integral view, itong discrete view. And since wala ngang estimations na nangyayari sa annual operating expenses, yung annual operating expenses are recognized in the interim period in which they are incurred, regardless whether subsequent interim periods are benefited. So, sa madaling salita, kung magkano lang talaga yung na-incur mong expenses for that period, example, for that quarter, ganun, yun lang yung mag-appear sa interim financial report. Hindi katulad sa integral view na ina-estimate siya. And also take note pala na since ina-estimate yung sa integral view, magkakaroon na lang yan ng adjustments at the end pagka i-prepare na yung annual report, ganun. So here in discrete view, proponents argue that the smoothing of interim results through estimation and allocation of annual operating expenses may have undesirable effects. For example, a significant drop in an earnings trend during the year may be obscured. Basta tandaan natin na pag sinabing integral view, ina-estimate siya. While dun sa discrete view naman, kung ano lang yung actual na na-incur, yun lang yung i-recognize mo. So, next slide po. So, which view on interim financial reporting is followed in practice? So, sabi ko nga kanina, wala naman talagang minention ang PAS 34 about sa dalawang view na to. But essentially, they adopt the mix of integral view and discrete view. So, next slide po. So, dito, in PAS 34.29 recognizes that while the requirement that same accounting policies shall be used in the interim period as those used in the annual period suggests that interim period is a standalone period, yun yung sa discrete view. While in PAS 34.28 states that the frequency of the reporting annually, semi-annually, or quarterly shall not affect the basis, and therefore the interim period is a part of a larger financial year. Yun naman yung sa integral view. So, next slide po. Now, dito naman tayo sa principle. So, since interim reporting yung gagamitin natin, alam naman natin na may mga instances na throughout the year yung bilangan or computation. But since interim reporting yung gagamitin, kailangan mo siyang estimate in order to properly account for that. Kasi may mga transactions na near at the end or at the end of accounting period pa siya ma-realize or mangyayari, ganun. So that's why kailangan natin itingnan itong mga principles na to. So first is the losses. So dito naman sa losses from inventory, write-downs, restructurings, or impairments arising in an interim period are recognized immediately. So ito kasi yung mga yung mga transactions, kumbaga yung mga economic events na kung saan nangyayari lang sila one time, big time. Yung hindi mo na sila kailangang i-allocate throughout the year. Yun yung So kapag nangyari sila, i-recognize mo na agad sila. So itong losses na to, discrete view siya. Next is the cost naman. So sabi dito, if a cost does not qualify as an asset in an interim period, it is not deferred either to wait if it qualifies in the next period or to smooth earnings over the interim periods with a financial year. So, sa madaling salita, i-recognize mo lang din siya once na nag-qualify na siya as an asset. Meaning, it is also recognized when incurred, kagaya nung sa losses, discrete view din siya. And ganun din sa liabilities. It must meet all the recognition criteria at the date bago mo i-recognize siya in the interim period. So last is the income tax expense. So kung yung dalawa ay discrete view, dito naman sa income tax expenses ay integral view. Since sabi ko nga kanina, yung selling and administrative expenses ay in-estimate yan. And alam naman natin na part yung tax expense ng general and administrative expenses, diba? Kaya nasa integral view siya. And since income tax expense in the interim periods are based on the best estimate of the weighted average annual income tax rate expected for the full financial year. So, ina-estimate siya. Kaya nasa integral view siya. Next slide po. So now let's move on to the measurement in the interim period. So measurements in the interim period are made on a year-to-date basis, meaning the period of the beginning of the first day of the current calendar year or fiscal year up to the current date, so that the frequency of your interim period either semi-annually, quarterly, or kahit gaano man kadalas yan, hindi siya makaka-affect sa measurement sa annual results. So here in sa revenues naman. So revenues that are received seasonally, cyclically, or occasionally are not anticipated or deferred in the interim period. If anticipation or deferral is also not appropriate at the end of the annual report. So, sa madaling salita ulit, yung mga revenues na nare-receive natin mo, seasonally, cyclically, ganun, like dividends revenue, royalties, and government grants, i-recognize mo lang sila once na na-receive mo na talaga. So, for example, if an entity, kunwari, if an entity expects to receive its dividends and it will be established in the second half of its financial year. So, hindi mo pa i-recognize yung partial revenue para sa first half year kasi sa second half year mo pa naman siya may establish o mag-receive pa nun. So, examples include dividend revenue, royalties, and government grants. Additionally, some entities consistently earn more revenues in certain interim periods of a financial year than in other interim periods. For example, seasonal revenues of retailers. Such revenues are recognized when they occur. So, last is the cost incurred unevenly during the financial year. So, costs that are incurred unevenly during a financial year are deferred in the interim period only if it is also appropriate to defer them at the end of the financial year. So, meaning, wherever IFRS requires costs to be expensed immediately when incurred, these costs are fully recognized in the interim financial statements when incurred. So, next slide. Now, dito naman tayo sa transactions or events and its accounting treatment. So, itong mga inventory write-downs to NRV or reversal, impairment losses, gains and losses on changes in fair value, contingent rent, dividend income, dividend declared, all of these are recognized in full in the interim period. So, meaning, once na na-incur mo itong mga dun mo lang sila i-recognize. So, discrete view siya. So, next slide po. Next naman is the depreciation or amortization. So, it is allocated to the period benefited except when the units of production method is used. So, since alam naman natin na itong mga depreciation and amortization ay in-estimate, edi siya, integral siya. And i-allocate natin siya to the periods where it is benefited. So, second is the income tax expenses. Gaya ng sabi ko kanina, it is allocated to the period using the best estimate weighted average annual income tax rate expected for the full financial year. So, integral within siya. So, third is the year-end bonuses or compensated absences. Gaya ng mga holidays, vacations, and other short-term compensated absences. And ang mga ito naman ay allocated when the entity has obligation to pay for them. So, it is also integral view, gaya ng sa dalawang nauna. Then, next is the changes in accounting estimates. Examples are changes in provisions, budgets, depreciation methods, etc. So, hence, these are accounted for respectively in the interim period where the change occurs. So, interim financial reports in the previous reports are not restated. So, discrete view naman ito. Then, sunod naman is the changes in accounting policy. So, it is accounted naman retrospectively as at the beginning of the earliest comparative presented unless it is impracticable for transitional provision requires otherwise. So, last is the correction of prior period error, and it is accounted for respectively. So, that's all for my discussion. And para mas maintindihan po natin ito, Mr. Mejia our last reporter will present and discuss the illustration. So, thank you po.
So, mag-proceed naman tayo sa mga illustrations para mas maintindihan natin. So, illustration number 1. Recognition and measurement in interim periods. XYZ company reports profit before tax of 1 million in its second quarter interim financial statements before consideration for the following. Inventory with a carrying amount of 100,000 has a net realizable value of 80,000. It is expected that the decline in value will reverse in the third quarter. So, nagkaroon ng 20,000 na write-down ng inventory sa second quarter. Next naman is an investment property measured under the cost model has a carrying amount of 250,000, but its recoverable amount is 210,000. So, sa second quarter, nagkaroon naman ng impairment of asset which is worth 40,000. Next, an investment in fair value through profit or loss measured at acquisition cost of 20,000 has a fair value of 25,000 as at the end of the second quarter. However, the increase in the fair value is expected to be only temporary. So, there is an unrealized gain of 5,000 for the second quarter period. Next naman, no depreciation is recognized during the second quarter. The annual straight-line depreciation of items of PPE is 360,000. Sabi, wala daw na record na depreciation sa second quarter. Pero i-allocate pa din natin ang depreciation expense sa lahat ng quarter. So, 360,000 divided by 4 quarters para makuha natin yung depreciation para sa second quarter. So, 360,000 times 1 quarter over 4 quarters na in a year is equal to 90,000 for the second quarter depreciation expense. So, next naman, letter E. XYZ company has a policy of providing 12 days paid vacation leaves to its employees. The vacation leaves are vesting and accumulating. Total paid vacation leaves eligibility of employees for the full year is 240,000. However, only 30,000 worth of paid vacation leaves have been availed during the quarter. So, sabi ko nga kanina, sabi nga nila kanina na year-end bonuses, compensated absences, and vacation leaves are part of employee benefits. So, yung 240,000 i-allocate natin sa buong taon. Dahil quarterly ang reporting period, kaya 240,000 times 1 over 4 is equal to 60,000 per quarter. Sabi pa dito, 30,000 lang ang na-avail sa second quarter. So, may 30,000 pa na di na-avail. Pero kahit di pa na-avail, i-record pa din natin sa second quarter. So, yung buong 60,000 ang i-record natin. Okay ba? Okay. Next naman. It was discovered that the depreciation in the previous year was overstated by 9,000. Since it is in the previous year pa, it is a prior period which must be corrected retrospectively. Retrospective application means that the correction affects only prior period comparative figures. So, the current period amounts are unaffected. So, para mas maintindihan natin, pupunta tayo sa breakdown ng illustration number 1. Basahin natin yung requirements. Compute for the adjusted profit before tax. Next slide, please. Ayan po yung breakdown ng illustration number 1. Basahin po ulit natin. An adjusted profit before tax ka na 1 million. So, yung write-down of inventory na, which is 100,000 na cost, less yung net realizable value mo na 80,000. So, mayroon kang 20,000 na write-down. Impairment of asset ka naman na 250,000 less 210,000 na worth 40,000. So, yung unrealized gain mo naman na 25,000 less 20,000 kasi 25,000 yung fair value nung yung asset mo through fair value profit and losses. Kaya mayroon kang 5,000 na unrealized gain. O sa depreciation expense naman na 300, annual depreciation expense naman na 360,000 times 1/4 to get yung second quarter depreciation expense alone. So, mayroon kang 90,000. Next naman is yung vacation leaves, which is employee benefits. So, 240,000 times 1/4 to get the second quarter na amount na 60,000. So, di ba kung maalala nyo, 30,000 yung na-avail lang daw. So, kahit hindi pa na-avail yung 30,000, i-record natin ng buo yung 60,000. So, kung i-compute natin, yun, kakalabasan is parang kang adjusted profit before tax na 795,000. Kung maalala nyo yung last given, since yung error na yon is a prior period error and is non-counterbalancing error, its correction does not affect the profit for the quarter. So, yan po yung illustration number 1. Next slide na po tayo sa illustration number 2. Next slide, please. O, yan, illustration number 2. Costs incurred unevenly. So, basahin po natin yung problem muna. EFG Company is preparing its interim financial statements for the period ended March 31. So, first quarter pa lang. The following relate to the transactions during the first quarter. So, total sales for the interim period was 1 million. Next is cost of sales was 450,000. To be able to get the gross income, total sales less cost of sales. So, mayroon ka na, kung total sales ka ng 1 million less 450 na cost of sales, so may gross income ka na 550,000. So, proceed mo tayo sa next given. EFG is liable for 5% commission on its sales to its sales representatives and agents. No commission has yet been paid as of March 31, 20X1. So, EFG Company will pay for the commission on its sales representatives for 5% of its sales. So, sales ka ng 1 million times 5% is equal to 50,000 commission for the first quarter ending March 31, 20X1. So, next naman. A building with historical cost of 1,200,000 is being depreciated over 5 years using straight line method. So, kung i-compute natin yung annual depreciation niyan, 1,200,000 divided by 5 years. So, mayroon kang 240,000 na annual depreciation. So, itong 240,000 is i-allocate pa natin sa 4 quarters. So, 240,000 times 1/4 is equal to 60,000 na depreciation for the quarter ended March 31, 2021. So, mayroon kang 60,000 na depreciation expense for the first quarter. So, next naman is EFG prepaid a 1-year insurance on its assets for 40,000. So, meron kang prepaid insurance na 40,000 which is i-allocate natin. Since 1 year mo lang nabayaran yung insurance mo, i-allocate natin per quarter yung prepaid insurance mo. So, 40,000 times 1/4 is equal to 10,000 insurance expense per quarter. Next given, property taxes of 20X1 amounting to 26,000 was paid in January. So, nabada mo din lahat yung property tax mo for the whole year. So, i-allocate ulit natin yan per quarter. So, 26,000 times 1/4 is equal to 6,500 for the first quarter. So, next naman. Advertising costs of 50,000 were incurred in February on promotional activities held on Valentine's Day. Since na-incurred mo na yung 50,000 na advertising expense mo noong February, i-record natin yan ng buo sa ating quarter. So, yung buong 50,000, is yun yung i-record natin for the first quarter period. Next, year-end staff bonuses yan naman. Year-end staff bonuses, employee benefits na naman. Year-end staff bonuses are expected to be around 92,000. Employees become entitled to the bonuses as they provide services to the EFG company during the year. So, 92,000. I-allocate ulit natin yan sa fourth quarter. So, 92,000 times 1/4 is equal to, so, magkano yun? 92,000 times 1/4 is equal to 23,000 per quarter. So, 23,000 yung i-allocate natin na amount para sa ating employee benefits sa first quarter. So, next naman tayo. So, next naman is loss on sale of used equipment on March 2, 2021 was 30,000. So, sabi nga ni Miss Eloisa kanina, losses are recognized immediately in the interim period. So, yung 30,000 na amount na loss on sale of used equipment is i-recognize natin agad. Next is letter J. EFG incurred 12,000 on unanticipated repairs on its factory equipment on March 16, 20X1. So, since meron ulit yung word na incurred, i-recognize natin ng buo yung 12,000 para sa ating first quarter. Since na-incurred mo agad yung repair na yan, yung factory repair, is i-record natin yan agad. Proceed na tayo sa next given. EFG leases one of its retail stores. Monthly rentals are 5,000. However, the lease contracts provides for a contingent rent equal to 2% of the excess of sales over 900,000. Since sabi niya is 5,000 monthly rentals, so 5,000 monthly rentals yun, hindi per quarter. Kaya 5,000 times 3 kasi January, February, March. So 15,000 for the quarter. So plus yung contingent rent daw na equal to 2% of excess of sales over 900,000. So yung sales natin na 1 million less 900,000, meron tayong 100,000 na excess, sabi daw. So 2% daw nung excess na 100,000 is yung contingent rent. So 2% of 100,000 is equal to 2,000. Kaya yung 15,000 natin na quarterly rentals plus contingent rent na 2,000 is equal to 17,000 tayo na rent expense for the quarter ended March 31, 20X1. So next is other operating expenses incurred during the first quarter totaled 120,000. So dahil incurred daw ng first quarter is 120,000. So requirements. Compute for the profit or loss for the first quarter ended March 31, 20X1. So next slide po please. So ayan po yung breakdown ng ating illustration number 2. So kung mapapansin nyo, sales less cost of sales, 1 million less 450,000, gross income ka ng 550,000. So yung letter C naman na commission mo, andyan naman, 5% times 1 million is equal to 50,000. Next is yung depreciation expense mo na ng 5 years na 1,200,000 times yung divide by 5 years. So meron kang meron kang 240,000 na annual depreciation. So kung i-allocate natin sa quarter times 3/12 or 1/4 is meron kang depreciation per quarter na 60,000. Next naman is yung insurance expense mo. 40,000 times 1/4 is equal to 10,000. Next, property tax ka na 26,000 times 1/4 for the quarter is 6,500. Yung advertising cost mo naman na incurred mo sa Valentine's Day, i-recognize natin yan immediately kasi incurred 50,000. Staff bonuses, employee benefits yan na 92,000 na for the full year is i-allocate natin for the 4 quarters. Kaya 92,000 times 1/4 or 3/12 kasi yung 3/12 na kung mababalikan niyo yung lower years nyo is tawag doon lowest term. Sorry, lowest term. So staff bonuses na 92,000 times 1/4 is 23,000. Next naman, yung loss on sale mo na i-recognize mo immediately na 30,000, repairs din na na-incurred mo immediately 12,000. So ito yung solution ng rent. 5,000 times 3 na 15,000 ka plus yung excess daw ng 1 million sa 900,000 times 2%. So meron kang 17,000. Other operating expenses naman na 120,000. So pag i-compute natin yan is 171,500 na profit sa ating first quarter. So malinaw naman siguro yung illustration number 2 natin. So next slide po please. So punta naman po tayo sa illustration number 3, provisions, changes in estimates. So babasahin ko muna yung mga given and then sa solution na ako mag-explain para mas maintindihan po natin. So, among the transactions of KLM Company for the first 2 quarters of 2021 were the following. So, KLM Company recognized a 100,000 write-down in its inventory during the first quarter. KLM had expected that the write-down will reverse in the second quarter. And in fact, in the second quarter, the recovery exceeded the previous write-down by 20,000. So next naman, KLM provides warranty for its sales in the first quarter. KLM Company estimated a 5% warranty obligation on its first quarter sales of 1 million. In second quarter, a change in accounting estimate was made. It was estimated that the cost of warranty should be 10% of total sales. The second quarter sales amounted to 1,200,000. So basahin mo natin yung requirement. What are the effects of the transactions listed above on profit or loss before tax in the first and second quarter interim financial statements of KLM Company? So next slide po tayo para makita po natin yung solution. Next slide po please. So kung papansin nyo po, bakit hindi ko ni-record ng buo yung 120,000? Kasi sabi nga doon is nag-exceed ng 20,000 from the previous write-down. Kaya hindi ni-record ng buo yung 120,000 because yung reversal recognized sa second quarter is limited only to the amount of previous write-down. So di pwedeng mag-exceed sa 100,000 yung i-record mo na recoveries for the second quarter. So andyan naman yung notes eh. The 100,000 inventory write-down is recognized as expense in the first quarter, while the 100,000 recovery of write-down is recognized as a reduction to expense in the second quarter. Notice that the reversal recognized is limited only to the amount of the previous write-down. So, malinaw po yun yung sa letter A. Next naman is yung letter B po. So warranty obligations for the first quarter is 5% of 1 million is equal to 50,000. Yun po, malinaw po, andyan naman po. So to compute for the warranty obligation for the second quarter, i-add muna natin yung sales ng first quarter and second quarter na 1 million plus 1.2 million is meron kang 2,200,000. Multiply natin na 10% na change in accounting estimate, napalitan po ng 10% for the second quarter. So, meron kang 220,000. So, yun nga, 220,000. Since bago pa magkaroon ng change in accounting estimate is meron na tayong warranty obligation sa first quarter na 50,000, ililess na lang natin sa nakuha nating warranty obligation for 2 quarters. Yung warranty obligation na 2 quarters is 220,000. So, since mayroon na tayong first quarter warranty obligation na 50,000, ililess na natin yon para makuha natin yung warranty obligation sa second quarter. So, 220,000 less 50,000 is equal to 170,000. So kung makikita nyo po, ito yung net effect on profit or loss. So sa first quarter, mayroon kang expense na 150,000. O, expense. Ililess natin yan sa ating profit or loss. Sa natin. And sa second quarter naman, meron kang 70,000 na loss or deduction sa expense. I-deduct yan sa ating profit or loss. So, illustration number 4 po. Ang susunod, next slide po please. So, punta naman po tayo sa illustration number 4. Measurement of interim income tax expenses. So, babasahin ko muna yung problem bago po natin makita yung solution at mas maintindihan po. So, NOP company expects to earn 100,000 pre-tax profit each quarter. NOP has tax rates of 20% on the first 200,000 of annual earnings and 30% on all additional earnings. Actual earnings match expectations. So, requirement. Dalawa pong requirement sa ating illustration number 4. So, first requirement, compute for the weighted average annual income tax rate. And second requirement, compute for the income tax expense recognized in the quarterly interim financial statement. So, next slide po, please. So, kung makikita po natin, ito po yung solution. So, si NOP company nag-expect ng 100,000 na profit, na pre-tax profit in each quarter. So, sa buong taon, meron siyang annual pre-tax profit na 400,000. NOP company has tax rates of 20% on the first 200 ni annual earnings. So, sa first and second quarter, ang tax rate ni NOP company ay 20%. And yung natitirang 200,000 sa third and fourth quarter, ang tax rate na is 30%. So to calculate the weighted tax average, it involves adding all of the taxes paid under each bracket. So kung makikita nyo, yung first bracket is yung 200,000. Pre-tax profit, first 200,000. Multiply by tax rate applicable for the first 200,000 profit. So yung first and second quarter na 200,000 na profit niya is 20% ang tax rate. And the next one na ang income tax expense mo for the first 200,000 mo na profit is 40,000. So yung next naman na pre-tax profit in excess of 200,000 na same as well din 200,000. Kaso lang sabi nga kasi yung first 200,000 nakita mo is 20% lang. So, yung additional na 200,000 is 30% na yung tax rate niya. So, kung i-compare natin, 200,000 times 30% is equal to 60,000. Eh, to compute daw yung weighted average annual income tax rate is plus po natin yung income tax expense natin na for the first and second quarter and the third and fourth quarter. So, 40,000 plus 60,000 is equal to 100,000. Divide by total profit for the year na 400,000. So, makukuha natin ang 25% na weighted average annual income tax rate. So, yan po yung gagamitin natin sa pag-compute ng quarterly income tax expense. So, kung makikita nyo po, napakadali na po ng solution natin. First quarter na pre-tax profit na 100,000 multiply by nakuha nating average tax rate na 25%, ang income tax expense natin for the first quarter is 25,000 as well as sa second, third, fourth quarter. So, yan po yung breakdown kung makikita niyo po. Napakatali po, di ba? So, punta naman po tayo sa next illustration, illustration 5. So, punta naman po tayo sa illustration number 5, income tax benefit. QRS company expects to incur losses of 15,000 in each of the first and second quarters of the year, but expects to earn pre-tax profits of 15,000 in each of the last 2 quarters, thus having zero profit for the year. QRS company estimated a weighted average income tax rate of 30%. Actual earnings match expectations. So, compute po na, yung requirements po is to compute for the income tax expense benefit recognized in the quarterly financial statements. So, punta po tayo sa solution. Next slide po, please. So the term income tax benefits, alam ko familiar kayo dito. Generally refers to any tax laws that provides you with an opportunity to reduce your tax obligations. So si QRS company ay nag-expect ng 15,000 na loss for first and second quarter. However, sa kanyang last 2 quarters or sa third and fourth ay magkakaroon siya ng profit na 15,000 for each quarter. So, wala siyang kinita for the whole year. QRS estimated a weighted average income tax rate of 30%. So, ito yung breakdown ng income tax benefit. So, makikita nyo, meron siyang 4,500 na tax benefit sa first and second quarter. And na i-deduct sa kanyang tax expense for third and fourth quarter. So, yung 30%, given na yan yung tax rate niya ni QRS company. Given na po yung 30% na tax rate. So, kung makikita nyo, first and second quarter loss ang meron sa kanya. So, yan ay tax benefit or deduction sa kanyang tax expense. So, kung makikita nyo, yung annual, pupunta kayo dun sa annual na row or column. Yung pre-tax profit niya is wala. So good news din, wala siyang babayarang tax. So, yan po yung breakdown. So, napakadali naman po ng ating income tax benefit computation. So, next slide po please. Illustration number 6 na po tayo. So, illustration number 6 naman na po tayo. Tax year and financial year do not coincide. Basahin po muna natin yung problem. TUV company's financial reporting year ends June 30 and reports quarterly. Its taxable year ends December 31. For the financial year that begins July 1, 2021 and ends June 30, 2022, TUV company earns 20,000 pre-tax profit each quarter. The estimated average annual income tax rate is 30% for 20X1 and 40% in 20X2. So, ang requirement is compute for the income tax expense recognized in the quarterly financial statements. Same as well dun sa illustration number 4. Ang pagkakaiba lang, yung taxable year at yung financial reporting period ni TUV company is magkaiba. So, next slide po please. So, babasahin ko muna yung note. If the tax year and financial reporting year differ, interim income tax expense are computed using separate weighted average income tax rate applicable for the tax year. So, may kanya-kanyang weighted average yan applicable for the tax year. So, sa 20X1 tax year, ang gagamiting weighted average income tax rate is 30%. And sa 20X2 naman na tax year, ang gagamiting weighted average income tax rate is 40%. So, sa kanyang financial reporting year, gumamit siya ng fiscal year ending June 30. Samantalang yung taxable year niya is gumamit siya ng calendar year which ends December 31, 2021. So, nag-start ang kanyang financial reporting period ng July 1 na magtatapos ng June 30, 20X2. So, punta na tayo. Si company earns 20,000 pre-tax profit each quarter. The estimated average annual income tax rate, kung makikita nyo dyan, is yung for the first and second quarter is 30%. So, kung compute natin yon, syempre, consistent naman yung pre-tax profit niya na 20,000 per quarter. So, mayroon siyang average income tax rate na which is given na 30%. So 20,000 multiplied by 30%, which is the 20X1 tax rate applicable for the 20X1 tax year. 20,000 multiplied by 30% is equal to 6,000, as well as this for the second quarter ending December 31, 20X1, which is 20,000 multiplied by 30% is equal to 6,000. Oh, so punta naman po tayo dun sa ano. So sa kanyang taxable year, which taxable 20x taxable year, which is the third and fourth quarter ng kanyang financial year. So third quarter, March 31, 20x2 is yung end ng third quarter. So kung compute natin, 20,000 times 40% is equal to 8,000. Malinaw po, andyan po yung ano, so, given. June 30, 20x2 yung end ng kanyang ano, fourth quarter. So 20,000 times 40% is equal to 8,000. So mayroon siyang pre-tax profit for sa kanyang annual na 80,000. So, yung tax expense naman niya is 6,000 plus 6,000 for the 20x1 or for the first and second quarter, and 8,000, dalawang 8,000 po sa kanyang third and fourth quarter. So, 6,000 plus 6,000, 12,000 plus 8,000, 20,000 plus 8,000 is equal to 28,000 tax expense sa kanyang annual tax expense po. Malinaw po. Andyan po. So, ganyan po yung breakdown po ng illustration number 6. So, yan po. So, bago po tayo mag-proceed sa ating last illustration is, explain ko po muna sa inyo kung ano itong restatement of previously reported interim periods and kung ano po yung pwede nating i-apply dito. Kung paano po natin siya gagamitin. So, it is a change in accounting policy other than one for which the transition is specified by a new accounting standard and shall be reflected by, or in simple words, it is a change in accounting policy that is not specified or stated by a new accounting standard and shall be reflected by, number 1 po, restating the financial statements of prior interim periods of the current year. So, kung sa second quarter, nangyari yung change in accounting policy, sa first quarter interim period ay i-restate or i-adjust na natin. And the comparable interim periods or the current year-to-date of any prior financial years that will be restated in the annual financial statements in accordance with past 8. So, number 2 po. When it's impracticable to determine or not realistically possible to determine the cumulative effect at the beginning of the financial year of applying a new accounting policy to all prior periods. So, kung hindi daw ma-determine yung cumulative effect sa mga previous period or previous year bago pa magkaroon ng change in accounting policy at the start or beginning ng ating financial year. Adjusting the financial statements of prior interim periods of the current financial year and comparable interim periods of prior financial years to apply the new accounting policy prospectively from the earliest date possible. I-apply natin agad yung new accounting policy prospectively at the earliest possible date by reconciling or comparing the financial statements ng ating previous interim period at yung comparable interim period ng ating previous financial year. So, punta na po tayo sa problem. Next slide po, please. So, problem na po tayo. Illustration number 7. Restatement of previously reported interim financial reports. So, DEB company reported profit after tax of 100,000 in each March 31, 20x2 interim financial statements. Additional information is shown below. Amounts are net of tax. So, A 10,000 cumulative effect gain resulting from a change in inventory cost formula was recognized in profit or loss during the first quarter. So, the cumulative effect of change in accounting policy is recognized as direct adjustment to the beginning balance of retained earnings and should not be recognized in profit or loss. The cumulative effect gain in appropriately increased profit, thus it is deducted. So, yung cumulative effect gain po na 10,000 is nag-inappropriately increase yung profit. na nadagdagan po yung profit natin inappropriately. So, i-deduct po natin yon. So, next is, in March 20X2, a component of an entity was classified as held for sale of the total loss on discontinued operation of 12,000. Only 3,000 has been recognized in the first quarter. DEB intends to allocate the remaining 9,000 loss to the other quarters in 20X2. So, the profit or loss on discontinued operation should not be allocated but recognized in full during the first quarter. So, requirement, compute for the restated profit after tax during the first quarter of 2022. So, yung solution po is nasa ating next slide po. Next slide po, please. So, yan po. Ito po yung profit natin before adjustment na 100,000. Cumulative effect of change in accounting policy natin na nag-result ng inappropriately increase sa ating profit. So, i-deduct natin 10,000. And yung loss on discontinued operation na 12,000 minus 3,000, 9,000 na dapat i-reflect pa daw or i-adjust natin sa second quarter is nilagay na natin agad sa the earliest possible date po ng ating interim period. So, 100,000 less 10,000 less 9,000 is equal to 81,000. So, yan po. Diyan po nagtatapos ang aming report. So, thank you po sa ating pakikinig. At bago ko po sana makalimutan is gusto ko lang po din magpasalamat sa author ng ating ginamit ko na book, which is Mr. Zeus Milan para sa kanyang intermediate book na part 3. Yun po. And po sa aming ginamit na questionnaire para sa aming games po is thank you din po kay Mr. Conrado T. Valix po. Yun lang po. Thank you ulit po sa ating classmates, schoolmates sa pakikinig. Thank you po. Yun lang po.